Good. I should be live, but we just want to double and triple check. No, excuse me. All right, so I've got notes over here. I got info over here. We're going to start the journey. So we started with $200. Currently, I've invested $220. When did we start? We started on October 1st of 2024. That's the first of this month that's about to end. All right. I'm looking to, over the first 4 months, get that to 2,000. So since I started with 200, we're not going to worry about the 20. That's going to be 600 in the following 3 months, 6, 12, 18, 19, 20, because I want to stick with a system. I want to invest $500 a month every year for 6,000 a year, and then have the dividends built off that, because that is what I can do in my current situation. I do have a job opportunity coming up. We will see if we get that. That is for next month. If so, that could change things because you need to adjust your budget. If I'm making more money, I can invest more. Right now, the things I deal with is I am a 80% disability vet, so I live off of that, which, just to be transparent with it, is just under $2,000 a month. I'm at like 1,960 something a month. Fortunately, that's gone up every year the last couple of years. I think when I first got out, it was like 1,700 a month. Why do I say this? There's a lot of Americans living at or near the poverty line. There are a lot of Americans living under the poverty line. And one of the biggest hurdles to beginning investing is we're all month to month. We're all check to check. It's difficult. So I get that. Not everybody's going to be able to swing $500. I started this account with $200, okay? $100, $50. If you had to start at $10 a month, I don't care what it is, pick a number that you can handle. $10 a month isn't going to get you far, but guess what? Over time, it gets you somewhere. Pick a number you can handle, be consistent, and put that in, okay? So the most important thing, weight loss, that's something I got to get on. The most important thing is getting started, right? I need to get over there, and I need to drop the weight. I need to get in here. I need to start depositing monthly at regular intervals and regular amounts to build up my investments, right? It's always the first step that's the hardest. So we're going to do a couple of journeys on this channel. I game. That's awesome. That's fun. Love it. Like I said, I got to lose weight, and we got to get financially better. So that's the kind of 3 pillars of this channel. I'm 45, 2 tours in Iraq, haven't died yet, survived. So here we are, so there's some life advice for those of you who are younger. But let's get into this. We put 200 into the account on October 1st, 2024. What did we do with that 200? Right here on the screen. We put that 200 into Earn. I like Earn. We'll get back into Earn, but you're going to find out something here. We bought 28.735632 shares, and we averaged $6.96 per share. I will be holding Earn long term at some point. I hadn't fully developed my concept when I started. All right. Then on the 15th, deposited $20. Why did I deposit $20? Because I'd heard about something called Roundtree. So I looked into RDTE. On October 17th, 2024, I put a measly $20 into the account to buy RDTE. Let me find it here. This is not the one. Where is the one? RDT, where are you? This is just all the money. Okay, so it's here with the dividend. Got it. 20 right here. Wow, I just had something to drink. Crazy. So my $20 got me 0.450755 shares, just under half a share. And we got that at $44.37 a share. I'm not going to worry about the dividend just yet. Then I made a switch. On October 23rd, I evaluated Earn more closely. I realized that buying on the 1st missed the X date. So for you that don't know, on dividend stocks, you have an X date. You have to buy the day before the X date to get the next dividend for whenever they say that dividend is. Okay? What that meant is that I was not going to be getting a dividend in October from Earn. And this is standard. This is usual. Usually when you buy a stock in that month, you don't get a dividend that month, you get it the next month because you tend to miss the X day, especially if you're doing stuff like me where I get paid on the first. Notice I put the 200 in on the first. So we missed the X day. There was going to be no money coming into the account on just the earn in October. That's why I put 20 in to get the RDTE so I could start getting a return this month. So I looked and I said, hey, I found something that will give me a return this month, even though I'm this late into the month. So I made a switch. So where am I at here? Yeah, I saw YBTC and I saw that I could buy in time for the October dividend and at a much higher yield. The much higher yield is important to the strategy, but that's not why you don't get earned for the super high yield. You get earned for the consistency and growth over time. Okay. But the main reason that I sold the earn was I wasn't going to get it this month, and I wanted to start getting returns this month. YBTC will give me returns this month. So I sold the 28 shares and the fractions at 702. Hey, what did we buy at? Remember, we bought it at 696. So profit. Nice. Doing this switch did not negatively impact me. I did not lose money. I actually gained money. We sold at 702, an improvement of 6 cents for a total of 201.72, a profit of $1.72. We took the whole 201.72 and we bought 4.612014. Yeah, I'm only going to give the long string of numbers once. The rest of the time I'll be like, 4.6. Shares of YBTC at 43.74. Why do I give the first string the first time? Just for accuracy. Eventually, those trailing numbers kind of matter, but they never get super, super important. On October 24, RDTE paid a weekly dividend of 33 cents, 33.335233, but per share. Now, I had less than half a share, so I received 15 cents in dividend. I put my account towards DRIP, which is just dividend reinvestment, okay? That's all that is. So on Robinhood, I would need like $10, I think, minimum, maybe $5, but there's a minimum amount that you can put into a trade, into a buy order. 15 cents does not reach that threshold. But on DRIP, they do the mechanisms behind the scene and it automatically gets put in. Now, I got paid that on the, I just said it, forgive me, on the 25th. The 25th was, we'll pull up the calendar as we see, Friday. It was pending all day Friday. It hit. So the DRIP did not happen until the 28th on Monday, which is a long time to wait, but it's 15 cents. It's not a big deal. Just for people that are looking at doing these weekly dividends, if you have a DRIP, I just want you to be aware that you may not get your DRIP completed until the following week. Okay? Just something to note. Because Friday I wanted to do this video, but Friday the dividend hadn't cleared. Then I went and manually, because I'm using ShareSite, I went and manually did the dividend and the DRIP. And then today it got the notification that it went to on Robinhood and it did it automatically. So I had to go back and undo what I did because it did it automated, which is great. I wanted to do it automated. And that's going to save me a lot of time when I get more stocks. What we're going to go over today is Robinhood, but whatever platform you want. I used M1 Finance before. I've used Webull. I'm going to go over ShareSite, track your dividend, and then my ideas on this particular account. The last account I had up to $30,000 in over 2 years of investing while being partially employed. And we were getting up to $450, nearing $500 a month on that account. I cashed that account out to make the big move from Boston down to Texas. We splurged a little, got me this nice computer, 4090 RTX, very expensive for me, So, we did some things. But now we've gotten to the struggle bus and we are back on our feet enough to start this investing. So let's get back into it. What was the next thing that we did? We caught the dividend. The dividend was how much? The dividend was 15 cents because only less than half a share. However, why is that important? We bought that 15 cents worth for a measly 0.003464 shares at $43.30. Okay, it's a super small amount of shares. It brought my total RDT up to 0.454210 shares. So we're getting just a little more. And at $44.36. Now, I've thrown in a lot of numbers your way. Why does $44.36 matter? Because our original cost on purchase was $44.37. I'm just showing where these trailing numbers that I keep giving you, and even something as small as 15 cents for 3,000ths of a share, minutely matter. It all adds up a little. Our cost average is now down a whole cent because of this 15-cent buy. Yay, drip. Good stuff. All right, since October 21st, I've realized $1.72 in trades. That was the earned trade, and 15 cents in dividends for a realized gain of $1.87. Why am I saying realized? What does realized mean for those that are new to stocks? Unrealized gains is stock go up, stock worth more, but 10 minutes from now, stock could be worth less. That gain is not realized. That gain is out there in the ether, and you don't have that gain yet. It's there, but it's not real. Real is I can put that in my pocket. I can put that in my bank account. Well, the only way you can do that is to sell the stock at that price, and then you realize the gain. Well, dividends and other forms of distributions, because not everything is a dividend. Excuse me, but that's getting too technical. Well, we're going to call them all dividends. Sometimes they're going to be distributions, okay? We're not going to make that distinction. Because I'm trying to get people who haven't done finance and who haven't done investing before some baseline information. Let's not get too complicated. So if they give us money, we're calling it a dividend. But just be aware that's not always going to be true. Sometimes there are distributions and there are differences for that, tax implications, all kinds of stuff. Okay, cool. So we're going to move on. I made the point that we saved a whole penny on our average per share, even though we don't even own a share yet, because of 15 cents. That's good. We like that. Now I'm explaining the difference between realized gains and unrealized gains. So when I sold earn, I sold it at the higher price. I made that $1.17. That $1.72. That $1.72 is now a realized gain. And the 15-cent dividend is a dividend, but I'm going to call it a realized gain. It's actual money. So instead of the $220 that I put into the account, I've actually get to invest $221.87 because those realized gains got put back into stocks. All right, hopefully everybody's caught up on that. And now we understand the difference between unrealized gains and realized gains and reinvesting the realized gains into your account. We're not going to be doing a lot of trading on this account. We're going to be doing a lot of buying and holding. Earn was a special consideration. Now let's get into the stocks that are invested. I already told you my plan of $600 a month for 3 months to get me to $2,000, and then it'll be $500. We're not going to worry about the $20. What ShareSite does is tracks you on the close of business for the previous day. So right now we see that I'm at $236.77. At a glance, because I put $220 in, we know I'm up 16. Oh, yay, look at that, real time, $17.29. But this is going to fluctuate the whole time. I can't do a video with fluctuating numbers the whole time. So we're using ShareSite. And this was close of business, not the overnight, but close of business. Actually, no, this is tracking live. Yeah, it is. Look at that. Okay. The last time I looked, it was only doing on the close of business, and I say that because I would see the numbers and they would line up with closing bell, but we have something called after hours markets. And it was not lining up with the after hour markets. And after hour markets has been killing me, taking all my gains from the day and taking them away on the overnight. So this was reporting better than the live Robinhood was reporting, because this was stopping at the end of the day, and the Robinhood was showing me, see this big jump, this is pre-market. Boom. See, pre-market here, overnight here. So Robinhood would be showing me the overnight where it wasn't looking so good, and share sites like we don't care about the overnight. Anyways, long-winded way. What are we looking at? We're looking here. We see earn. We see what the price is. We see the capital gains. What is the gains again? That is the profits from the sell. Bought at 200, sold at 201.73. Also, again, special circumstance here with earn. Don't buy a stock and sell it a couple of days later willy-nilly. There was a reason. I shouldn't have started with earn. I should have came in with my plan. I didn't formulate my plan until like a week later. Okay, got a plan now. We're sticking to the plan now that I have a plan. I was very lucky, very fortunate, because if I'd have been at a loss, I'd have been more hesitant to sell because I don't want to sell at a loss, right? You're not putting in $200 to make $1.73. Okay, so don't just be willy-nilly selling. And you're only allowed so many trades during the course of a week before they flag you for day trading, and day trading requires like a large amount of money in your account to legally be able to day trade, because they don't want the average person that's supposed to protect us as consumers losing our crap day trading. Okay. Wow. Then you see the RDTE for half a share. So we're down on the capital gains, which just means the value of the stock, but we got 15 cents in dividends. And then over here on the RBTC, we haven't got our dividends yet, but we're up a whopping 15.40. And remember, why the account is almost 30 days old, I didn't buy YBTC until we have it over here. Where did I buy YBTC? The 23rd. All right, the 23rd. So let's bring up why I bought YBTC. Dividend history right here. Go to the NASDAQ right here. All right, it's not showing here yet, but we see the effective date 27th last month, the record date 27 last month, the payment date 30th last month. You don't get that. Let me give you an example. Let's do Exxon. I meant dividend. Easy. X date, the 15th. You have to own it the day before the X date. No wins if we don't care, go away. Declaration date, what's that mean? That means on the 2nd of August, they said, hey guys, we're declaring that if you own the stock by the X date, before the X date, we are going to pay you on the payment date. And the record date and X date are generally the same day. It just means that, hey, we are recording the information now. Okay, it's just the date of record. It's just paperwork. Nobody really cares about the record date. What we care about is the X date and the payment date. It helps to know the declaration date, because that's when they're going to tell you the X date and the payment date. This is when you have to own it by the X date. This is when you get paid for it, the payment date. Now you see in the middle of the month, but you're not going to get that payment until close to the middle of the next month. And this is how it works for almost everything. Let's look at Apple. We'll just take a look. We'll go to dividend history. Apple says, hey, oh no, actually Apple's way closer. I didn't know this about Apple. Look at that. Apple says the X date is the 12th. We're going to pay you 3 days later on the 15th. Interesting. A lot of the stocks that I've held that are quarterly have like a month offset. Okay, but let's go back to YBCT. TC. And we want dividend. That'll take us right to it. So, as you see, 27 to 30, I could get in, even though I was that late in the month, and I could get those shares and get paid this month. That's what we wanted. That's what we were looking for. Insane yield, 54.74%. $47.20 will get you, at the current rate, $25 a year. That's insanity, okay? However, take a look. Let's pump the brakes. $2.11. Yay, we like that. $1.61. $2.06. 20 cents. It's okay. It shifts. It's very shifty. 412. You're not going to get that every month. That's the only one over $2, right? That's the only one over 211. So inconsistency, volatility. That's because how Round Hill makes their money is 0-day options calls. Okay, so this is what you have to look at is the volatility. Like when it comes to the month that you're getting 20 cents, you're going to be big sad. You're not really going to be big sad. 20 cents a month would still be $1.20 cents, 240 on 47, like 2-3%. That's like generally what you'll get with dividends, but that's not what you get YBTC for. You don't get YBTC for 2%. You get YBTC for the big home runs. Now, you're going to hear NAV, you're going to hear NAV depreciation, and you're going to hear, well, stock goes down, and you don't want the stock go down, right? So let's go to summary, and we can look 1 month. Hey, no, look, stock go up. So usually when you get a super high yield, what you're worried about is the stock cratering, and then when the stock price goes down, because when you look at the dividend history, they give the number. Hey, this is what we're going to pay this year. Not for this type of, on most stocks. Like if I go back to Exxon, let's do that for a minute. Let's go back to a more traditional, so I can break this down. Exxon isn't saying I'm going to give you 3.2%. Why is Exxon not saying that? Because the value of the stock fluctuates constantly. What Exxon is saying is that during 2024, I'm going to give you $3.80. Now I'm going to break that down into 4 quarterly payments. Why do people like Exxon, by the way, despite the 3.2 dividend? It's because it always goes up. Had a little bit of time here. They got bumped off the aristocrat here because they went 2 years without a bump. But it almost always goes up and they're right back to going up. And I actually had Exxon at 9% because I had Exxon cost on yield during the crisis, the last time that the market dropped significantly. Whenever you can buy Exxon or anything long-standing like that at like a 9% yield, and they, like I said, they don't promise you a yield. They give you, hey, this is going to be our annual dividend. So they merely didn't cut prices despite the fact that their stock price was going way down. Stock price goes down, dividend yield goes up. But sometimes when the stock price goes down, they cut the annual dividend. Then your yield goes down, however the math works for you. So they simply didn't cut, even though instead of being $117, they were down at like 80 or maybe even 68 at the time. And that's when I bought. Well, that's how I had a 9% yield on Exxon. You don't always get that, but when you get those opportunities, you take those opportunities. But that's not where we're at now. I just wanted to show you the dividend yield on a company that actually gives a yield. Exxon is saying, I'm going to give you this much money this year, and we're going to do it in this kind of payment system. That's not how YBTC works. YBTC is not telling us they're giving us $25 this year, and they're going to average it out because this is an average. YBTC works differently. So every time YBTC finishes a day and they're up, or it could be down, that's why you only got the 20 cents back in June, right? It is increasing what they're going to pay out. All right? $4.12 there. They had a really, really great month there. But then you see the following month in April, no payment at all. We don't like no payment bad. YBTC pays monthly, and it missed a month. That's a little scary. But the people who bought back in January don't care that it missed in April. Why? Because you don't get 54.74% anywhere. I say that, I'm about to show you some places you do, but this is rare. And the reason is, if a company is paying you a dividend this high, how are they going to sustain it? And that is why this is different from Exxon. These guys are generating this money consistently through options trading every day. Okay, and then hopefully catching growth on the overnight. We're not going to get too technical, too strategic. They have a different model. That different model is allowing for both the stock price to go up and the dividend to be insanely, stupidly high. And they'll pay us this month. We don't have the dividend yet this month. It hasn't even been declared this month. We are a little worried because it's the 29th, but we do see declaration dates that have gone as late as 29 in a month. These guys declare late traditionally. But yeah, I would like to not be in April here, all right, for my October. I would like this to actually pay out this month. We shall see. And then the other one I have is the RDTE. Let's take a look at it real quick. Oh, wait, what is this? Why is this all in the same month? Normally you have some very rare companies pay a yearly dividend. You get one payment a year. A big fat payment. Okay. Some, I don't even know if these exist anymore, pay twice a year. Okay? What most do, not counting special payments, what most do is pay quarterly. What a lot of people like to do, because of how compounding interest works, just the theory of compounding, they're like monthly. Because then you get to reinvest more often, right? And you'd rather have the money front loaded than spread out. If the trend of, as the line goes right, the line goes up, holds, you won't, then obviously the more you can front load, the more time and up that you're going to get. So if you like monthly, you should love weekly. Well, that's what we're trying, guys. Round Hill's going to give us money weekly. We just got our first payment. And it was the third highest payment, so middle out of the 5 payments. Nice. So, I don't go in with higher expectations because I didn't catch the 38, but I didn't come in on the 24 either. So, lucky timing for us. We got a decent mid-level payment this month on our first week. Yay, us. And we see Friday is the 1st, and that is when the next dividend will be paid. That is also when, first of the month, my $600 investment will be. So I've shown you that I've got a monthly dividend payer that's going to pay me this month despite buying it late in the month. And I've got a quarterly dividend player. This is 3.8%. Not really. That's 3.8% so far from what has been paid out. I think, so that's all of these payments. And I know that because my 15 cents on 0.45 shares here was 0.75, right? So they're going to make 52 payments. So let's do this with the calculator. Let me pull the calculator up and then let me see if it shows up. It does show up. Nice! All right, guys. We're going to take 3.8. We're going to divide it by 1, 2, 3, 4, 5 weeks. Okay. Hey, and I caught 0.75. I'm just a tick under the average. All right. Now 0.76 times how many weeks in a year? 52. Guys, we're talking about an annual 39.52%. If it followed this trend here, if it stuck with these averages here over the course of 52 weeks, 1 calendar year, 39.52% dividend yield. Not the 3.8. The 3.8 is what it's at currently. And again, that's because these guys aren't announcing an annual dividend. These guys are doing things differently, making money every week, and then paying out off of those payments. We are down a little here. So here is where you might be a little worried about NAV erosion. But let's go look at summary. We'll take a look at 1 month. We are down on the month, and then let's take a look at max. It's new. Okay, so we're down this month. This is true. But this thing started at $42. We're over $43. It's peaked at $45.20. So we're down from when I bought, but the stock isn't down. The stock is up. Now, why is that important? Because if it was just here and it just kept going down, then you're like, oh, they're not going to be able to keep this yield up, right? But they're actually up from start. The line actually tracks up. Now, we want it to keep tracking up. over time. Actually, with these, you kind of want to track sideways with a little uptick because you're not here for the growth of the stock, you're here for the payments. But you don't want the stock to go down because that becomes risky. Hopefully that makes sense. Most stock, you want the to the moon, baby, let's get there quick. But with this, we want to keep buying more shares. If this thing goes up to $300, I can't buy that many more shares. I want more shares with the high yield for this. All right, we've been at this for a while. So now let me break down what my plan is because I've showed you the two stocks that I have. I've showed you that they are insanely high yields. And I showed you that they will pay you very close to the time that you buy them, one monthly YBTC and one weekly RDTE. All of these are my real numbers. What a lot of people do is they don't show you their numbers or they only show you the stock trades that they won. I've got a video where I was doing an options trade. It went very poorly, so every investment doesn't work. I was trying to teach myself options. Options are complicated and difficult, but now RDTE trades options for me. I don't have to try to do the options trading. I found a fund that does the options trading. That's so I still get the exposure to option trading because I understand that while options have a high risk, they have a high reward, and I wanted some of that reward. I screwed myself up. I did not options trade well. But these guys can sit back, and it's so much easier for me to just buy shares of their fund and let them do that work for me. We'll probably still look into option traders later, but first I got to build the account. So step one, why am I going with these high yield accounts? I mean, obviously we like money, but what people need to understand is the higher the yield, generally the higher the risk, okay? But we also understand I'm a baller on a budget. I don't have a lot of money. If I had $10,000 and I could set $10,000 down right now, my account would not look like these stocks. At $10,000, I'm purchasing differently, okay? Here to get started out, I need an engine. I can put in X amount a month, and I need the dividends to help lift that up and give me more purchasing power in the early run. So, we are looking at $2,000 as a magical number. What does $2,000 do for me? On Robinhood, $2,000 gets me to the point where I can do a margin call. What does a margin call mean? A margin call means, hey man, my account is valued at $2,000 and I would like you to loan me money. So, and the first $1,000 on Robinhood is 0% interest. It's free money, but you still need to pay that $1,000 back. It's just not going to be tagging you interest, right? So the trick when you are dividend investing is that you need your dividend yield to be higher than the rate of the margin. I was doing this successfully on M2. When we started on M2, my rate was like 3.25. No, 2.75% on M2. Well, my dividends were averaging freaking 12% at the time. So I was killing that. Now, that was back when we had 0% interest. Obviously, the interest went up for the United States. So Robinhood, M1 Finance went up on their rate. My rate finally got to like 8%. My buddy, who his portfolio was sitting around 8 or 9%, now his leverage was killing him. His leverage was eating all of his dividends. He wasn't making any dividend gains. So his whole account was trying to resist off growth in a dividend portfolio until he pays down the leverage or buys more shares and changes the ratio, right? With me, I was easily clearing my payments because I was easily double the interest rate. So when the rates are high, it's harder to leverage, especially when you're playing the dividend game, because like a lot of places like Exxon, you're talking 3.23%, right? And you won't realize gains on that because you might be taking your dividends to pay down the leverage, or at least pay off the interest of the leverage. So you got to be careful with it. That's why the first 1,000 being no interest is so good. Let's see, track your dividends. And I'm about to show you why. Nope, not Snowball, not Snowball, not yet. I do have Snowball. Snowball's like, woo! Snowball is high tech. Let's go to my dashboard, on track the dividends. Boom. Um, Close. Okay, this is the actual investments. We're not worried about that. So I did a what if I put $2,000 into each of these stocks, because I'm not saying, oh, I was going to drop all this money at one time, right? I'm just trying to get projections. What does $2,000 buy me? Well, we're talking about a leverage when the account hits 2Ks of being able to borrow $1,000 at 0% interest. What can that thousand buy me? We'll take the number and we'll half it. So what it's saying is, if I put 2,000 in the YBTC, that would give me about 1,085 a year at the current averages that it hits, and those are not promised. Like, unlike something like Earn, and they can still cut their dividend, but Earn is telling you for this year, our goal is to give you $273.12 if you give us 2,000. That's our goal, and it's going to be clockwork. You're going to get the money every quarter, and it's going to be the right amount, yada yada. Or for Earn, it might be every month. Okay, YBTC works different. We're not promised any set amount, but off the averages so far, push them forwards times 12, you're looking at 1,085. Cut that in half because this is a $2,000 purchase. We're talking $540 something a year off of 1,000. Off RDTE, I'll get paid weekly. We're talking closer to 420, 425-ish, somewhere in there. Okay, and different stocks, right? So it's important to know that I can front load $1,000. Right now I'm putting 100 here, 200 there into a stock. To be able to front load 1,000 and start getting those dividends 30, 60, 90 days earlier than I would have been is huge. So this is phase one. This is why the high yields, because we're building the engine. We're building something where we can get the dividends quickly, up to $100, $200 a month, okay, which is a lot, so that we can now have extra power. I put my 500 average in every month to buy stocks. Oh, and I have another 100 in dividends to buy more stocks. We're looking for more purchasing power through the dividends. So 2,000 is the first magical number. We will reach that by January. October, November, December, January. 200, 600, 600, 600, 18 plus 2, 2,000. Averages out to 500 a month. There you go. We're trying to get an idea what that $2,000 by that point in time is going to be returning to us. That way we know how much we have in dividends to invest. Right now, I'm doing drip. Whatever that stock makes in dividends, that's going back to that stock. Partially that's because I can't do anything on Robinhood with 15 cents. Can't do anything, right? We don't have the threshold met for the dividend to be making enough to do payments, to really do buys. So whatever the stock is, it's going to get the money back. Now, later on, we're going to stop that. The stock isn't going to feed itself because these could be risky stocks. We want to take the risky money, we want to take the dividends, and we want to buy stable stocks. That'll be the next phase. That'll be stage 2 or phase 2, either one. Right now I'm in phase 1. We're building the engine. We want the monthly dividends going up, and we want the capital gains to be 0% to negative 3%, to we'll take whatever the upside is. In other words, we don't want to be buying stocks that are cratering just to get a high yield. We'll survive off losing 3% on the stock to gain many multiples of that on the dividend. We're happy with that at this point in time. It just can't be losing too much. Like this is fine. Let's turn this over to percentage gains. We have a 3.97% total return. We are still less than a month in, and we don't have the dividends from YBTC yet. All right? And we're up 3.97%. That's despite being down on the stock price by 2.63%. That 15 cents helped every little bit, to break this under 2%. And then we got a nice 7% little fatty gain right here for this month. Very nice. So we're sitting kind of pretty right now. Everything's looking good. We know what the plan is. We're buying for our engine. We're buying high yield. We know that I'm putting in $500 a month on average, but for the next 3 months, that has to be $600 to get it to that average over 4 months. And we're looking at 4-month windows because those are quarters. Okay. We'll talk about phase 2 at a later date. I'm not going to be back with a video about this, and the next video will be much shorter. Much shorter, because I was going over a lot of things and breaking down the whole history and giving out the beginning of the plan. Next one's just going to be updates. Every time it goes through and it's showing up on here on ShareSite, for those that want to take a look at that, then I'll be doing the video. So not here in real time on the actual day when the notification happens. We're going to wait for ShareSite to be updated so I have a nice format that's easily digestible to show you guys. So that's going to be the next update, is when YBTC or RDTE gets the dividends updated here and the drip goes through and the buy. And then I can update you on my new cost basis, how much the dividends were, and all of these nice little percentages to see if line go up or if we're stuck like Chuck. But anyways, guys, it's been real. It's been fun. It's even been real fun. This is The Climb to 1